I've never been big on indicators, but that is slowly changing with this new combination I've been using. It has everything you could possibly ask for while trading. Frequent entry points, simplicity, versatility, and most importantly, a high success rate. In this video, we'll go over how to set up these indicators and the multiple ways I'm using them to find winning trades. If you like trading, subscribe to the channel, like the video, and check out the link in the description where I post all my trades live every day. The indicator I added was these supply and demand zones that you can see here on the chart. I typically prefer to trade on price action, but with the way these work, I can do both. I'm using a script from a TradingView user. It's public and it's named Supply, Demand, and Equilibrium Zones. You can find it just by looking it up. Just click on it here and it will add it to the chart. It probably won't pop up immediately, and that's because you need to set your date ranges before using this. Double click on the screen and it should pull up this little dot that you can drag to select your date ranges. Now we want to make sure that everything is set up correctly, and in this case I'm using the default settings for everything, but I do adjust the dates. When we're looking at something intraday, you don't want the date too close or too far away from the current day, so I'd recommend using something roughly 1 or 2 weeks prior. This range should give you all the information you need without overloading the chart with unnecessary data from months ago. As the stock continues to trade throughout the day, you can just grab this tab and move it over to the current price, and it will auto-populate all of the things that you need. Okay, so we have our zones. Now what are they telling us? The indicator works by analyzing the volume of the shares traded over your specified time frame. By using that data, it creates zones where people are more likely to be buying or selling the stock. The red zones here are supply zones. These are places where selling pressure is likely to be high. Stocks will have a harder time moving up through these areas because many traders are holding right here and willing to sell. The blue areas are demand zones. When a stock is approaching these levels, you can expect buying pressure to pick up as people look to buy shares at a lower price. This red line in the center here is the equilibrium point. So based on all the trades over this time frame, this is the average price of all the shares that have been sold or bought. This can act as support or resistance depending on how the price is moving, and I've found it to be very accurate in predicting those moves. We could go a lot more into how they're calculated, but instead let's just jump straight into how we use these to make money. That's all we really care about. You may have noticed this purple line on all of the charts, and that is the volume weighted average price, or VWAP. This is the indicator we're going to combine the supply and demand zones with, and if you're unfamiliar with how this works, I'll put a link in the description that explains it in more detail, but for the purpose of this video, all we need to know is that the VWAP is giving us a general idea of the trend, and it acts as support and resistance. Since the zones are created by using the volume profile and the VWAP is also a function of volume, these two pair together perfectly. One way you can use them is as confirmation to enter a trade, or a denial or something telling you not to enter a trade. My chart often looks like this, with the supply and demand zones hidden, but let's say we want to pick up a trade. So we'll use our VWAP here. It breaks through the VWAP, which is a very bullish signal, but we still want it to get past this top over here. Here's our initial signal to start watching it, and then once we get through this, now we're really curious. Everything's looking good, and to us, it looks like this might be going on a run. Just to be safe, let's double check with our supply and demand zones and make sure we're not going straight into a supply zone that would give us a little bit of resistance on the way up. And would you look at that? So yes, we could buy it here when it breaks through the previous high of the day, but it's looking like it's going to go straight into this zone, and it's already having trouble getting past it. In this case, it looks like we might be better off waiting a little bit and getting a little bit more confirmation before we head into this trade. Then here we have Apple. This one is looking pretty good to us as well. We're using our VWAP again. It breaks through here. We decide this is probably a pretty good place to buy it. Double check on the demand zones. It looks like we have a little bit of room here before it reaches that equilibrium point, which as you can see did act as a short-term point of resistance, but it eventually broke through that before using it as a support and then following its way back up to the supply zone up here. This would have been a great intraday options trade to make, and I did. I bought some here where I circled it, and then I sold about half of it right before it reached this equilibrium point. Now, why did we do that? Well, I did mention that this line here was very important, and I didn't want to run the risk of it hitting this line here and bouncing straight back down to this level here. Then we're in trouble. So we took profits to lower our risk, and we were able to catch this run all the way up here. These zones can also be used to find low-risk, high-reward reversals. We see here that it runs up to the supply zone and just barely touches it, and that's when we start watching it. If it looks like our supply zone is going to act as an area of resistance, we can take a short position here. These trades have a great risk-reward ratio because we can put our stop loss somewhere just above this candle. And as you can see, that's not a very big move. Then your profit potential is theoretically all the way down here, but I'm typically looking to take profits just above the VWAP, which is another way we're using that indicator along with the supply and demand zones. And even though it didn't make it all the way down to the demand zone, we still have an incredible risk reward here. Obviously, the same is true for demand zones. When something is selling off and reaching this area, we should be looking to buy it if it comes back above it. To get live trade alerts every day using these strategies and others, use the link in the description to get daily day trades alerts. And if you found this video helpful, drop a like and subscribe to the channel for watch lists and more videos like this one.